Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. It is May 24th, 2024, and I'm here to bring you some trading levels in the major market indexes for the upcoming week of February 27th, which in fact will actually start a day later for the Memorial Day holiday on May 28th, and also bring you a real quick market update for the previous week. We'll take a look at the SPY, the QQQs, the IWM, and we'll also take a look at the bonds as represented by the TLT ETF. So in the last week, and in fact in the latter part of this week, we actually hit another all-time high, and of course a 52-week high this week, led by the favorable earnings announcement by NVIDIA. That actually fueled a rally yesterday, so that actually kind of pushed us up to all-time highs. And in fact, if one goes back to last February, at the end of February, we'll see this little formation right there on February 22nd. That was actually the NVIDIA rally that occurred 3 months ago. So that was a market driver yesterday, and it was a market driver 3 months ago as well. So anyway, that's where we are now, and so we're going to take a look at some trading levels for the SPY as well as the other market indexes. Before we begin, though, the usual disclaimer: Precision Trading Labs, we are neither money managers nor financial advisors. Anything that I talk about here is not investment advice, and it's for educational and informational purposes only. So here we are right now. Here we closed here at about 529.50 on the SPY here. The SPY, of course, is the ETF of the S&P 500, and right now we're sitting above this demand zone here. So right here in this region, we can see that there was an area of consolidation and price went sideways in here, really in this region here for about three days here. This is actually a 2-hour chart here. So we got 9 candles in here, 3 candles a day here. So for the better part of 3 days, we basically had this consolidation. And then, of course, notice that price rockets out of there. If we think about what went on in this region here, we can think of the shares that are required by willing sellers. We can think of that as demand, okay? And we can also think of the shares that are offered by willing sellers as supply, okay? Well, within this region, for the better part of 3 days, supply and demand were in balance as shares kind of got shuffled back and forth within this relatively narrow range, or a little wider than that. Okay, but then right here, all of a sudden, there was an exhaustion of sellers. Okay, and at that point, then that left in its wake, all you had left then were willing buyers. Okay, and what goes on here is when price returns to this region, there is an expectation that there is still going to be buying pressure that's left here. Because right here, you had supply and demand that was in balance. Once there's an exhaustion of sellers here, all that's left in its wake is demand, okay? And as a result, we think of this as a demand zone. And so when price returns to this demand zone, it's an area of potential upward price pressure that's waiting to be tapped. And so that is the basis for a bullish trade. Okay, so when price returns to this region, and this region is bounded at the top by 521.5, and then at the bottom here by about 519.75, this would be the basis of a bullish trade here, where this would be our entry. We would place our stop behind this zone here, and so this gives us our entry point, that gives us our stop out. And then if we got a bounce out of here as anticipated, this would be a 1-to-1 trade, that would be a 2-to-1 trade, that would be a 3-to-1 trade in terms of thinking about risk versus reward versus risk. Okay, so that's the predicate for a bullish trade here. And of course, we could express a bullish trade by simply buying the SPY, or one could, of course, buy a call, and then of course, when one could also do any number of option spreads. The most basic being a bear call, a bull call vertical spread, or one could, of course, also do a bull put vertical spread in order to collect premium. Okay, but all of that would be done out of this demand zone. Okay, and so that's the basis for a bullish trade out of this. Also, if you look below this video, you will see another link there. That link is actually to another video that we put together. That's a somewhat slightly more detailed explanation of the supply and demand concept. So if you find this interesting, you should definitely click on that and take a look at that. All right. So that's the SPY here. At the moment, because of the fact we're sitting just off of all-time highs, there's really no supply here at this point. Okay, this is definitely a demand zone here. Okay, but there really isn't any clean supply zone here. When we get a couple of charts deeper into this, I'll show you a supply zone here. But because we're actually sitting here just off of an all-time high on SPY, there isn't really any supply here. All right, so that's the SPY. If we move to the Qs, the Qs, of course, is the ETF of the Nasdaq 100. Okay, so again, we're just off of all-time highs. This formation obviously looks very reminiscent of the SPY. Okay, and so right down here, about 3% below here, this is an area. This is that same, more or less that same formation that you saw in the SPY, and that's an area of demand here. And again, that's that same exhaustion of sellers that occurred after this area of consolidation. And again, this is an area of upward price pressure that's theoretically waiting to be tapped here. And again, we would express a bullish trade out of this demand zone here. Okay, if you take a quick look here though and compare the two, you'll notice here that with the SPY formation, okay, the demand zone here is only about 1.5% below current price. Okay. On the other hand, if we look at the Qs, we'll see that it's basically twice that distance at about 3% down from current price. And so as a result, if in fact we do get a pullback, okay, what we're going to have to do is, of course, watch to see which one of these is going to hold, because most likely, whichever one holds, even if the other one hasn't arrived at its demand zone, it will probably move in sympathy with the other one. So consequently, we'll have to see whether the SPY is the one that essentially rules and kind of leads once price hits the demand zone, or whether price may end up going further down, and then it kind of catches and bounces at the level of the Qs. So we'll have to keep an eye on that. But most likely that if there is a pullback, price in fact will bounce at one of these two levels, either here or in the case of the Qs further down at this 3% mark there. All right, so that's a story with the SPY and the Qs. If we go to the Russell 2000 now, which is the ETF of the IWM, right here we can actually now take a look at a supply zone here. So notice right here, again in the 2-hour chart, notice price drops here. We actually have this green bullish candle right here, okay, which essentially kind of starts to signify a reversal up here. Notice price dropped here. Okay, it actually gapped down, then notice it recovered, and then notice price then goes sideways here, and then essentially the bottom drops out of here. Okay, that's an exhaustion of buyers, unlike what we just saw on the SPY and the Qs before, which was an exhaustion of sellers. And this is the same narrative, of course, except in reverse. Okay, again, right in here we had willing buyers and willing sellers trading shares within this relatively narrow range. And then right here, we had an exhaustion of buyers. Okay. And at that point, then we already talked about supply and demand basically being at equilibrium in here. And then once there's an exhaustion of buyers, that only leaves willing sellers up here. And again, we can think of willing sellers as supply. Okay. And so as a result, this is a supply zone here. So when price then drops out of here, again, there's the expectation when price gets back here, there will still be some untapped selling pressure. And at that point, then we could express a bearish trade out of this supply zone. And again, it's just, what I just said before for the SPY and the Qs, except in reverse. So of course, one could short the stock up here, one could buy a put, okay, and of course, one could also do a bear put vertical debit spread, and of course, one could also do a bear call of vertical credit spread and then sell premium out of that. Okay, all of that again occurring at this supply zone, and these are just different ways of expressing the trade out of that same zone there. Okay, notice on the Russell, price came right down to this. This was a demand zone here, and price pretty much got down there and then bounced. It actually missed this by about a dime. I believe the low point on there was 202.35. It actually did miss this by a dime, but essentially that was that's more or less, we can think of that as a bounce out of that demand zone there. Okay. So at any rate, that's the story with the Russell 2000. That's about 1.5% down. And if you notice, that's really the same distance as the SPY. Okay, so you've got the Russell 2000 and the SPY, both of which are the same distance away from current price, versus the Qs, which is about twice the distance, about 3% down. Consequently, I have, not that I really know this, but I think because of the fact that you've actually got these two indexes at roughly the same distance, it's I think it's a higher probability that you'll actually see a bounce out of that SPY level, just because I think there's a greater quantity of trading, and essentially you get a bigger chunk of the market that looks like it may want to all react to the same general region. So, but we'll obviously see about that. Okay, so so that's the story with this demand zone here. And then if we look above where that supply zone is, that's probably more or less kind of equidistant, maybe just a little less. Okay, but that supply zone there, that's about 1.25% up there, maybe a little less. So that's about a little more than 1% up, and then this is about 1.5% down. So we can see we're actually kind of caught between these two ranges within a relatively two zones within a relatively narrow range. Okay, so that's the story with the Russell 2000, and then lastly we'll wrap up by taking a look at the TLT, which of course is the ETF of the longer duration bonds. These are the bonds that are at least 20-year duration and beyond. So this is not including the 10-year note, okay? But it basically goes more or less the 20 and the 30. All right. So that's the story with the TLT here. So above here, we actually have tested supply here, but this is not fresh supply. Okay, this has been tested. Okay, so right here we had a rally-based drop formation. Right here again, this is that exhaustion of buyers that I talked about earlier. Okay, right here, price then drove up into this, really kind of pushed hard against breaking the zone, but didn't quite, and then it kind of dropped out of here. So this we can now think of as tested supply. It's no longer fresh supply. And okay, unlike here, which is a demand zone here, this is a fresh demand zone. And the reason we say it's a fresh demand zone is because price has not been back there since it formed. Okay, so that fresh demand zone here, that's a little less than 1% down. And then again, that tested supply zone is obviously like a 0.5% up or something like that. The thing about a tested supply zone is that it's significantly weaker than a fresh supply zone. Could this hold again? Sure, but by the fact that the price drove all the way to the back of this zone, I would anticipate that in fact, if we get a rally in the bonds, it's probably going to drive through here. At which point then, there's really the next clean area of supply is about 3% up. And then, and if we actually look here, we'll notice that here, there's really nothing here to kind of stop price from going. And in fact, once we get here, notice that this is a big unfilled gap here. So I would say that if we get up to, let's say, right now we're at 91.3, 91.30. If we get up to 93, or 93.30, After that, then there's really air until we actually get up to that level of supply up there. All right. So that's the deal with the TLT. So I think, coming down, if we get if it pulls back about another 1%, I would anticipate getting a bounce out of here. On the other hand, if this thing now rallies up, it's quite possible that this thing could actually push, start to approach 94, because of the fact that we've got a weak, very tested supply zone, and then after that, an unfilled gap above here. So that's the story with that. So at any rate, there's your market wrap up, and there are your trading levels for the equity indexes and the bonds. Thanks so much. Bye bye.